Hi, it's Jeffrey Cohen, Chicago Quantum. How are you? We're investment advisors out of Highland Park, Illinois. Today, just feeling a little goofy, naming the video Stock Market Blues. Why do I have the blues? Because I don't know what to talk about today. Because I don't want to talk about the stocks that we have positions in, but I want to talk about the markets, and I want to talk about what we saw today, and I want to talk about some communications out on Twitter and things like that. And so I'm going to make a point of not talking about the stock we have a position in, stocks, and just talk about it. So this is Kung Fu Panda. This is Poe. Poe is called the Dragon Warrior. He's a spirit warrior. And similar to an options trader, you really need to think about the future to understand time, to understand what they used to call chi, which is energy over time, and really know how you're going to play it out. And so today, see, our model's been running very much risk on, but I don't believe it. And the reason I don't believe it is everything everyone ever taught me about stocks says that when interest rates go up, stocks go down. When the government starts tightening money supply, stocks go down. When gold goes up, when inflation is high, stocks go down. When earnings season's here and you're expecting that consumer credit's getting worse, corporate credit's getting worse, interest expense is getting worse, taxes are higher, that it's going to be a bloodbath in stocks. But in fact, stocks have been going up, and so we're struggling. So I'm going to talk a little bit about what we see. Today, U.S. equity factors, this is out of Cohen. Probably should bring it up. By the way, we're not paid by any of these folks, but I just like to call it out, give them a little shout out. So if you look at the market today, you see that it was higher, then it came down and it pretty much touched zero, and then it popped back up again. It's an odd market. Bitcoin is at 33,618. That's nuts. Bitcoin has gone through the roof. It's doubled in the past year. That's crazy, right? And so a lot else I can tell you. And by the way, when the utilities sector goes up, usually that means it's because interest rates are going down. Utilities pay a lot of dividends. Dividends are worth more only if risk-free interest rates are less. And we look down here at the 10-year. Again, thank you, Cohen, doing a good job there. You see the 10 years down to 4.82%. The 30-year at 4.93%. These were both above 5% a couple of days ago. So what happened? Well, what we read in Bloomberg was that a couple of hedgies and a couple of big fixed income trading desks decided to unwind their short positions. So they were shorting U.S. treasuries, longer duration, like crazy. And then all of a sudden, nope, unwind. And I got to tell you, it's odd for me. This is why I have the blues. I think of interest rates and I think of 350 million Americans all making little decisions. I think about mortgages. I think about loans on businesses. And I think that all those actions are going to go into setting long-term interest rates. But then I realize in 2 days, a bunch of hedgies and fixed income desks are able to swing long-term treasuries by, a half a point, or let's say a 10% move in the underlying. And that shakes my confidence, shakes it. And so we were tracking a top 10 drivers list. There's a reason we're doing it. The top 10 stock market drivers, we haven't even updated it since October 4. So what this is, it's categories. Stock price volatility, historic and implied. Share price momentum. High yield corporate bonds. Real estate values. Metals pricing, platinum, silver, copper. Energy prices, We like to look at oil, natural gas, and if we could, electricity. The value of the US dollar, gold, separate from metals, because those metals were economically sensitive, and gold is kind of its own category. US Treasury long bonds, and real interest rates. By the way, you can measure both. US federal government cash intake, which is the inverse of liquidity, and Bitcoin price. Here's the problem. So if you want to use these are supposed to have these general curves. And so you're looking at things like federal government cash, Bitcoin, interest rates, and there should be a smoothness so that you can predict the future. And this would be in addition to kind of the hard estimation data that we're using for expected future returns to risk. But not when interest rates can move based on a couple of trading desks. Not when gold can be moved with a squeeze or with some futures. The dollar, the dollar's been, there's a typo. Energy prices, same thing. A lot of volatility. And so I don't like the volatility I'm seeing in the market. And even things like the VIX has been moving like crazy. Now the data we use, stock price volatility, that's been down. Last time we put it up there, it was 3.8. I want to say it's 2.9 now, 2.95. This is measured on the 14th. On the 14th, 10 days ago, the expected market return to risk was almost 10%. You add that to the risk-free rate of 5.5%, you're almost like 15.5% return to risk. That's crazy. That's really high, right? You look at the all stock variance, you're talking 2,979 stocks that passed data validation, which means minimum level of liquidity. That's 3,000 stocks. And you're looking at a historic price volatility of 3.57 versus 3.8. That's a massive reduction. So what we're seeing now is we're seeing a smoothing out of stock prices, a reduction in volatility, not of the S&P 500 per se, but of all stocks. I love it when I'm listening to the pundits and they say, we're seeing elevated volatility. And I wonder where. Now, they could be talking about bonds. They could be talking about other things. But if you're talking about volatility, if you're talking about variance, stock prices are in a full year-long decline in historic price volatility. Stocks are less volatile. Stocks are smoothing out. They're not going up fast. They're not going down fast. They're just kind of hanging out. It's so interesting. All right. So we can't trust our top 10 drivers because they're being managed or, dare I say, manipulated by the big desks. I don't want to think about that. It makes me uncomfortable. So I saw the equity factors today on Cohen. You could see it here, but it was even more pronounced earlier today. Small cap growth driving, small cap core driving, a little less on value. But what's interesting is large cap and mid cap value were driving. And so you had stock pickers picking value, and you had small cap growth. Those are your squeezies, those are your memes, those are your stonks. Stonks were up crazy today. And so it's a very much a risk-on point of view. And the reason that we are blue is because whenever I see risk-on small cap growth stocks, which means no earnings, probably no revenue, I see Bitcoin at 34,077. I don't understand. I'm back to trying to figure it out, Kung Fu Panda style, right? What else was interesting today? Did I tell you that utilities were up 2.6% today? That's crazy, right? Real estate is up 1.3% today. Craziest thing ever. Let's go to FinViz. I like it. So first off, the market was pretty flat today. You know, it was up, it was down. You're talking about like one-time relative volume. Some stocks, though, really screamed higher. We need to talk about that. Not the stuff over here. That's not that interesting. But the news stocks. Verizon up almost 10%. More subscribers. GE up 6.5%. Spotify up. RTX or Raytheon is up dramatically. Triple M is up dramatically. Just a lot of stocks up. And so if we try to figure out where's the bubble chart, right? Where is it? What's happening? Jeffrey, what's happening with the stocks today? If I say only give me 10 billion in up market cap, and I say give me the change not just for today, but give me a 1 week change. Well, over the 1 week, and I'm going to Windsorize it because the story stocks are too crazy. Let's just look at 5%. Windsorizing means taking the outliers out. It allows you to focus on the core part of the relationship. We Windsorize everything, just so you know. Take out the outliers. So if you look here, you'll see that for the most part, here's your line, your zero line. For the most part, everything's down for the week. Okay. Everything's down for the week. It's been a bad week for stocks. But what happened today? Today was crazy. Today, you see most things are above the line. They're up. That's interesting. So, everything decided to go up, screaming higher today. But my guess is not everything went up screaming higher. So, let's take a look at any stocks, small cap, micro cap, under 300 million. Oof. It's hard to see. First off, the changes are much higher. This is today's change. And this is 21% up. %21 down. You see just a tremendous spread. So micro caps really moved today. Now, I mean, maybe that doesn't give you the blues. Maybe that's exciting, right? Because if you're trading micro caps, wow, did they move? Wow, did they move? And so I don't even want to look at the ones that went up versus down. It's just look at that spread. That spread is just a tremendous spread. It's a tremendous spread. In one day, guys. One day. I got the blues because I can't keep track of it all. All right, what else do we want to look at? Let's have stocks of interest. Jeffrey, what are you interested in? Don't ask me what I own. That's not what the purpose of the call is, right? Fortress Biotech trades at $16.2 million. Book value is $2. It's trading at $2. It's pretty good. Skills, $4.76. AppLovin, $38.47. AppLovin was up today, 2%. FBIO was up 4%. Skills was down 3.5%. It's interesting. And then we look at some of the indices. You see the S&P 500, NASDAQ, Russell all up between 0.7 and 0.95. You see gold's down, crude's down, silver's down, euro's down, so the dollar's up. The 10-year bond is flat. Bitcoin's the big story here. It's at 34,100. Bitcoin is the story. Bitcoin is the story. So what else do I like to look at? I like to look at quantum computing companies. Hey, Chicago Quantum, home of quantum computing companies. And you can see across the board, IonQ dropped. We did some due diligence on IonQ. We do not have a position in IonQ. But it's interesting to talk about. What else? What else? Maybe we'll just take a moment, right? If we look at the Treasury yield curve, you can see that you make it bigger for you. Treasury yield curve is super important. This is FINRA. They regulate us, so I like FINRA. I don't mind having it out there. So if you look, 6 month, 3 month, 1 month, they're all trading between 5.55 and 5.6%. So I had a family member. Her name's Carol. Carol calls me. She says, oh, my husband's investment advisor. He's a real market maven. He says I could earn 5% by giving my money to PNC Bank for 7 months. I said, Carol, you should become a client. I'll help you. Do you know I could get you 5.5% for 6 months? Risk-free. No cost. No locking it in. Nothing. Just 6 months. And by the way, you get the interest right back in your checking account if you want. Right there. 6 months. 5.56%. TreasuryDirect.gov. I wouldn't even make any commission on her. I'd just helping her out, right? She'd be like a $10 a month client. Just give me $10 and I'll help you out. But the point is that with all the talk of interest rates changing, you're really looking at almost like a tablespoon shaped yield curve. 1 month, 3 months, 6 months, 5.55 to 5.6%. And then we come down a little, but not much. 4.81 is the minimum. It's almost a flat yield curve. Normally, the yield curve is positively sloped. Now it's more flat. So that's interesting. What else you got? So Jeffrey, how are we doing on the market barometer? Well, for the last week, value's been red. This is growth, size, stuff like that. Value, core, growth, they're all red. Everything's been a dog for 3 months. Defensive, sensitive, cyclical. The only thing that's helpful is sensitive is a little less red. But for the past year, sensitive has done better. So the market's in hell right now, right? But yet the small caps went up. Makes you wonder. So, what do I want to talk about last? Well, maybe just, I'm trying to figure out what I want to tell you. So if you ever want to see what we're really doing, like with the stocks we own, check out our Twitter, Jeff Cohen at U.S. Advanced Computing Infrastructure, Inc. It's always interesting. We post a lot. We share a lot of info. We're just going to take a quick look through the news. Emmer's bid for speaker implodes. All right. He probably got found out. I'm not seeing much news. What's happening with like Israel and Ukraine? I mean, nothing's going on, right? Oh my God. Phone lines. Hamas divers. All right. So in other words, nothing's going on. Just more news. So what about Ukraine? Do they even have a section anymore on Ukraine? Non-stop fighting. Smoke in the horizon. There's Zelensky. I know they're fighting. This is not that interesting. Reuters. Wall Street surges to close higher. Well, that makes sense. The expected return in the market's 15%. Of course it's going to rise, right? Doesn't mean it's going to stay up, but it's rising. There's no news. None of this is interesting. How about on Bloomberg? Anything? This is interesting. That's interesting. We're going to take a little look at that. So instead of looking at the Bloomberg news and kind of letting them do the work, let's look at U.S. federal debt level. $33.63 trillion. Let's go to treasury.gov. Okay. Okay, here's the chart. Here's the phrase that pays. So when we look at the U.S. debt, up until about 1980, it was $3 trillion. 3.33, excuse me. Ugh. I gotta go. I sneezed on that. So, good luck today. Good luck this week in the markets. Know that we're in some pretty heavy stuff. Pretty risky stuff. If you follow us, you know what it is. I'm not going to talk about it in this video. We're blue because the market did something weird. Small caps, exceptionally volatile. Large caps, not that much. Large caps have been down for the week. Up today, but down for the week. And all this stuff, top 10 stock market drivers, have been moving like crazy, and I think they're being moved by small numbers of people as opposed to just a long, slow, gradual rise or fall. So that's where we're at. And I don't understand why utilities, real estate are the best performing sectors. The 10-year is still 4.82%. It's not like interest rates are free. The 1 year at 5.44. We already looked at the 1, 3, and 6 month. They're at 5.55 to 5.6. They're very high, right? And so I think a lot of these movements are overblown. I don't understand them. And so I'm struggling a bit today. I got the blues. I got the market blues. So what I'm going to do is focus on my little world, personally, my stocks. I do not have a position in IonQ, but if I did, I'd sure want to pay attention to it. I'd be looking at it. The 50-day, the 200-day simple moving average. Not the EMA, the SMA, simple moving average. That's what the guys like to look at. I'd be looking at momentum drivers, MACD, all kinds of stuff, volume. And I'd say, oh, look, here's a trend. It's funny, this is a trend from another stock, but let's just take a look here. We draw some lines. You know, here's the good news about picking stocks, right? All you got to do is learn how to draw lines. Put a little Fibonacci in there. Let me wrap it up. So if I look at IonQ, I would say, well, Jeffrey, this stock's pretty simple, right? There's the $5 level. Then there's the $10 level. There's the $13 level, lucky 13. And then there's 20 bucks. It's tried to break through 20 bucks twice and it's failed. Up. Stabilize. Up. Test. Drop. Up, low volume, didn't quite make it. Drop, broke through the neck. What do you think? What do you think to my viewers? Do you like it? Do you think this is good? You think it's going right back up? Or do you think it's coming down for this line right here, this 200-day moving average, which is at $10.11? I say it's probably going to test $10.11. Why? Why not? It's a 200-day moving average. It's a natural place for it to maybe bounce off of. It's a terrible stock chart. I'm sorry I picked this one. IonQ is a terrible stock chart. And note to self, Jeffrey, maybe you ought to look at shorting some of this IonQ. It's crap. In fact, go back a few days. See if you get shorted at 16. Roll back. Use quantum. Roll back the clock. Shorted at 16. Maybe I'd cover today at 11. That'd be great. Doesn't really work that way, though. So, but you see what's going on here, right? Step ladder up. Step ladder up. Step ladder down. Don't know. You know, that's it. That's all I'm going to show you. Thanks a lot. Have a good night. We'll talk tomorrow.